Welcome to Earnings Recap. Today we're covering Airbnb's earnings report and earnings call January-March 2025. If you enjoy this kind of content, please like the video and subscribe to the channel. Today's deep dive is really laser focused on making sense of Airbnb's first quarter of 2025. We've got their official earnings report right here and also the transcript from their call with analysts.
Yeah, the important stuff.
Exactly. And our mission really is simple. Break down both numbers and what management had to say into plain English for you.
Absolutely. So first up, we'll be, digging into the key financial figures from Jan to March 2025.
Right. The hard numbers.
The hard numbers. Then we'll pivot a bit, look at the earnings call itself, highlight some analyst questions, get into the insights from Airbnb's leadership, their performance, where they're heading.
Sounds like a plan. So let's get started with those numbers then.
Let's do it.
Okay, let's unpack these first quarter financials. What's the headline figure?
Well, the top line, the revenue, it shows a positive trend. Airbnb pulled in $2.3 billion. That's a 6% increase compared to the same time last year.
6%. Not bad.
Not bad at all. And it's worth pointing out, if you strip out the currency fluctuations, constant currency, that growth would have actually been 8%. So, yeah, despite whatever economic wobbles are out there, it looks like demand for Airbnb stayed pretty solid.
So, okay, 6% or even 8% constant currency, yeah, nothing to sneeze at. But profitability, the net income number looked, well, quite different, didn't it?
Yeah, that is a key point. So revenue up, right? But net income actually dropped quite a bit. We're talking 42% down.
Wow, 42.
Yeah, landing $154 million. That compares to $262 million in Q1 24.
Okay, so what happened there? What drove that down?
Well, a few main things, really. First, they ramped up hiring, increased their headcount, so naturally higher payroll costs.
Right. Yeah.
Second, they took some hits on investments they'd made in private companies, impairment losses, basically.
Ah, okay. So some bets didn't pan out as expected, value written down.
Sort of, yeah. And finally, just lower interest rates meant less interest income coming in compared to last year.
Gotcha. So payroll, investment write-downs, lower interest income.
Yeah.
Those kind of offset the revenue growth.
Exactly. They combine to pull down that net income figure.
Okay. So some spending for the future, maybe, and those external factors hitting the bottom line this quarter. Now, what about the core business? Bookings. Were more people actually, using Airbnb?
Oh, absolutely. That looked healthy. Nights and experiences booked, they increased by 8% year over year.
8%, okay.
Reaching 143 million. And this uptick in actual bookings, it drove their gross booking value, the GBV.
Total value of everything booked.
Right. That went up too by 7%, hitting $24.5 billion.
$24.5 billion. Wow.
Yeah. And what's interesting here is that this growth wasn't just like in their usual strongholds. It was across all regions.
Oh, really?
Yeah. But Latin America and Asia Pacific showed the strongest percentage growth. So broader strength.
That geographical spread sounds pretty positive, yeah.
Yeah.
How did their sort of operating profitability look? Adjusted EBITDA, you mentioned.
Right. Adjusted EBITDA, it gives you that sense of core operating profit, stripping out some items. It came in at $417 million for the quarter, which translates to an adjusted EBITDA margin of 18%. Now, just for context, last year, Q1 24, EBITDA was a bit higher, $424 million, and the margin was 20%.
Ah. Okay, so a slight dip in the margin then, from 20% down to 18%.
Exactly. A bit of compression there this time around.
Got it. So still profitable on that adjusted basis, but the margins tightened a bit. What about cash? I mean, how much actual cash are they generating? That's always key.
Still very strong on that front. Net cash from operating activities was $1.8 billion.
$1.8 billion.
Yeah. And free cash flow, that's the cash left after they pay for capital expenditures, also really robust at $1.78 billion.
Okay.
So yeah, despite that net income drop we talked about, the underlying business is still throwing off a lot of cash.
That is always a good sign. Let's drill down a bit into where that revenue is coming from geographically. You mentioned growth everywhere, but any notable shifts?
Well, North America is still the big one. It brought in $1.054 billion. That's up a bit from $1.015 billion last year.
Okay.
Europe, Middle East, and Africa, EMEA, that was $597 million, up from $567 million. Latin America, we mentioned strong growth, right? It jumped more significantly to $343 million from $307 million.
Right.
And Asia Pacific also showed good growth, hitting $278 million, up from $253 million.
So yeah, confirming that picture growth across all regions.
Pretty much, yeah.
Interesting. Okay, let's switch gears then to the other side of the ledger, expenses. Where do they see the biggest jumps in spending?
Okay, so total costs and expenses overall up 9%. That's $2.234 billion.
9% increase overall.
Yeah, and looking at the specifics, product development saw a pretty notable increase, up 20%.
20%, wow.
Yeah, hit $568 million. And a big chunk of that was higher stock-based compensation.
Okay, paying the talent.
Seems like it. Sales and marketing also climbed, up 10% to $563 million. And again, increased stock-based comp was part of that story.
Mm-hmm.
Operations and support costs rose 6% to $303 million. That was mostly payroll, insurance, customer relations stuff. Although they did apparently save some money on third-party customer service costs.
Okay, so stock-based comp is a recurring theme in those increases. Anything else significant on the expense side?
Yeah, one line item stood out. Other expense net, it jumped quite a bit from being a small gain last year, negative $10 million, to an expense this year, negative $38 million.
Right, and you mentioned that earlier with net income.
Exactly. That's mainly those impairment charges we talked about, the write-downs on their private company investments showing up there.
Got it, okay. And finally, before we transition to the earnings call chat, just a quick look at the balance sheet. Specifically, their cash position. How are they looking there?
They are sitting on a very healthy pile of cash. Cash equivalents, short-term investments, totaled $11.5 billion at the end of March.
$11.5 billion.
Yep. And if you add in restricted cash, their total cash hoard reaches
Wow.
an impressive $16.75 billion.
Wow. That is quite the war chest. Gives them a lot of flexibility.
Definitely.
It gives us a really solid picture of the Q1 numbers. Thanks for walking us through that. Now let's turn our attention to the earnings call. What were some of the, key themes, the strategic priorities that management was really emphasizing with the analysts?
Yeah, absolutely. A major focus was definitely their global expansion strategy. I mean, sure, the US, UK, Canada, France, Australia, those are still huge for them, right? Like 70% of their gross booking value.
Right, the core markets.
The core markets, but management really hammered home their commitment to speeding up growth outside those areas in other markets.
And are those efforts actually, bearing fruit already?
That's what they're indicating, yeah. They said these targeted global markets are expanding at roughly double the pace of the core ones.
Double. Okay, that's significant.
It is. They pointed to Brazil as a kind of success story, said their brand marketing investments there have really paid off over the last couple of years. And they contrasted that with Japan, where similar brand building is, newer. They started from a lower base of awareness there, so it implies, a longer runway for growth.
Right, so it really underscores that they need a tailored approach for each market, not one size fits all.
Exactly. Localization is key, considering awareness levels and any product tweaks needed.
Okay, so global focus is big. What other sort of investment areas did they talk about that are aimed at driving that future growth?
Investments in new offerings. That was another huge topic. Airbnb actually announced plans to invest somewhere between $200 million and $250 million just this year in 2025.
Wow.
To launch and scale totally new businesses. And they expect the first of these to be unveiled really soon. In May.
200 to 250 million? That's a pretty significant chunk of change. Where's that money actually going?
Yeah, it is. Well, the bulk of it, they said, is going into marketing. Building awareness for these new things, generating demand, building out the teams. Mm-hmm. And they're also ramping up investment in product development, hiring more engineers, basically, to speed up the roadmap for these new ventures.
Okay, so marketing and R&D, essentially.
Yeah.
But with that kind of spending, what does that mean for their overall profitability this year? Did they address that?
They did. They actually reaffirmed their expectation of maintaining a strong full-year adjusted EBITDA margin. They're still targeting at least 34.5%.
Even with that big investment?
Even with the investment. But they did add a caveat. They said the impact of these investments on their quarterly margins would be most noticeable in the first 9 months of the year.
Okay, so expect some margin pressure earlier in the year before maybe normalizing.
Sort of, yeah. The long-term view is definitely that these new ventures will become really significant revenue drivers, and they plan to keep layering in new offerings, annually.
It sounds like they're making some pretty big bets on these new initiatives then. Another area everyone's buzzing about, obviously, is AI. What's Airbnb's play there? What's their strategy?
Right. So Their immediate focus with AI, what they talked about most, is customer support, enhancing it. They plan to roll out AI-powered customer support later this year, part of their summer release, they called it.
Okay. Customer support makes sense as a starting point. Why there first?
Well, the rationale is pretty clear. AI can handle the massive volume of customer contacts. They get millions every year. It can operate 24/7, speak multiple languages, and process huge amounts of info really efficiently. So potential for better service and cost savings, presumably.
Makes sense. And what about beyond customer service? What are the sort of broader, longer-term plans for AI?
Well, the long-term vision, as they described it, is to kind of evolve this AI customer service agent into something much more integrated.
Okay.
They see it eventually becoming part of the search function itself, and maybe even growing into a full-blown, like, travel and living concierge for users.
A concierge.
Yeah. And they also shared a view that, as AI models themselves become more common, maybe even commoditized,
Right.
the real value will actually flow to platforms like Airbnb, who have the huge user base, the distribution, the data.
That makes sense. Owning the customer relationship.
Exactly. And they also mentioned internal uses, like boosting engineering productivity with AI, though they think the bigger gains there are probably more medium term.
So a pretty measured strategic rollout, starting with support, then aiming bigger. What about the tech behind all this, the actual platform? Any updates there?
Yes, actually. They made a point of highlighting that this big multi-year project they've had, rebuilding their core tech infrastructure.
Oh, yeah, I remember hearing about that.
Right. Well, apparently it's now largely complete.
Okay, so what does that mean practically?
It means faster product development. Much faster. They expect to launch significantly more upgrades, more features in 2025 compared to previous years. And they see that pace, that throughput continuing to increase.
Right. A modern tech stack should definitely unlock that kind of speed. Makes
Right.
sense. They also mentioned addressing like friction for users with new products and services. What do they mean by that?
Yeah, they kind of reiterated their big vision. One single Airbnb app for all travel and living needs. They drew a comparison to Amazon, how it expanded from books to, well, everything.
Right. The everything store model, but for travel and living.
Kind of. They explained that the first wave of these new businesses will be really close to the core travel stuff, enhancing stays with experiences, other services.
Okay, logical adjacencies first.
Exactly. Then over time, they plan to expand into things like services for hosts, and then maybe even further out into related areas. The big goal, get users engaging with the Airbnb app much more frequently.
Increasing that frequency. Got it. Speaking of experiences, that's something they've struggled with a bit in the past, hasn't it? What's the plan for revitalizing experiences?
They definitely acknowledge the past challenges.
Yeah.
Things like how it was integrated into the main app, how things were merchandised, lack of social media tie-ins, getting enough good supply, not enough marketing. Basically, a list of pain points.
Right. It never quite seemed to take off like the core stays business.
Exactly. But for this upcoming relaunch again, planned for May, they stress that they've tackled these issues head on, planned improvements across all those areas, and they sounded, frankly, very confident about the potential this time around for the revamped experiences product.
Okay, well, we'll see in May then. Sounds like they've learned some lessons.
Yeah.
Partnerships can also be a big growth engine. Did they touch on that at all?
They did. They noted that historically, Airbnb hasn't really had a robust partnership function. It wasn't a big focus. But they hinted that might be changing, a potential shift towards being a more open ecosystem. They suggested they're looking into partnerships with both local and global brands.
Interesting. How would that work?
They indicated they'd likely start with, sort of, first-party integrations tighter, direct connections, before maybe moving towards working with more third-party companies later on.
Okay, that can definitely open up some new avenues for them. What about North America? Still their biggest market, but you mentioned other regions growing faster. Is there still room to grow back home?
Yeah, they talked about that. While North America did grow, there's definitely an internal belief there that it can and should grow faster.
What is that?
Well, mainly because traditional hotels still dominate the overall lodging market by a huge margin.
Right, lots of market share still to potentially capture.
Exactly. And they even got specific about demographics where they think they can improve penetration. They mentioned the Latino population and also folks in the central heartland states.
Okay, so very targeted thinking, even in their biggest market. The co-host network. That sounds kind of unique. What's the story there? What's the latest?
Yeah, the co-host network. The idea is basically matching up people who have extra time, the co-hosts, with homeowners who not to host, but maybe don't have the time to manage everything.
Okay, like a matchmaking service for hosting.
Pretty much. And what's really interesting is what they said about performance. Listings managed by these co-hosts apparently generate double the revenue compared to other listings.
Double? Really? Why?
Well, they attribute it to being selective. They invite top-performing, experienced hosts to be the co-hosts on the network, so quality control built in.
Ah, that makes sense. Smart.
Yeah, and they threw out some stats. Co-hosted places have high average ratings, lots are guest favorites, tons of the co-hosts are superhosts themselves.
Impressive.
And the network's been growing, both in co-hosts and listings managed. They're planning to expand it into Asia, next to Japan and Korea specifically.
That seems like a clever way to scale supply while keeping quality high. Another potential money maker for platforms like this is advertising. What's Airbnb's thinking on ads?
They confirmed it's definitely seen as a, quote, significant future revenue opportunity. They even threw out a number, potentially easily a $1 billion business for them.
$1 billion from ads. Okay, so when's that coming?
Well, that's the catch. They emphasized it's a matter of when, not if, but it's not something planned for this year, 2025.
Okay. So on the roadmap, but further down the line.
Exactly. On the radar, but not an immediate priority.
Understood. Finally, let's touch on regulation. Always a big topic in this space. What were the key messages from management on the call about dealing with cities and rules?
Yeah, they definitely addressed it. They emphasized that, in the majority of their top markets, regulations are already in place. This isn't uncharted territory for them anymore in most key cities.
Right, they've been dealing with this for years now.
Exactly. And they also made a point of highlighting the sheer amount of hotel occupancy tax they now collect and send to cities positioning themselves as a partner, not an adversary.
Trying to frame it as a positive contribution?
They cited examples like helping with the Paris Olympics, or their role in disaster relief efforts as proof of this partnership role.
Okay. Any specific cities mentioned?
They did mention New York City, but more as an outlier. They pointed to its very restrictive rules and argued that those rules haven't really helped with rents, but have pushed up hotel prices. Sort of a cautionary tale, maybe?
Interesting take. Okay, and what about the competition? How do they see themselves stacked up against others, like, say, Vrbo or traditional hotels?
Their assertion was pretty clear. They believe Airbnb continues to gain market share, both globally and regionally, and they see that share coming primarily from traditional hotels.
Okay, hotels are the main target. What about Vrbo? Sometimes analysts compare them directly.
Yeah, when asked about Vrbo's performance, they kind of downplayed it a bit. They noted Vrbo had a softer comparison period last year, and they highlighted Airbnb's own strong growth, especially in non-urban parts of the U.S., where they often compete head-to-head. And they also stressed Airbnb's lead in overall supply growth and in adding exclusive new listings you can't find elsewhere.
So painting a picture of continued market leadership and momentum.
That was definitely the message, yeah.
Okay. So putting it all together, it sounds like a quarter of, continued growth on the top line, but with profitability impacted by strategic investments and some external factors. And the call focused heavily on where those investments are going.
Absolutely. I mean, the key takeaway is looking at both the numbers and the call. You've got solid revenue growth still happening. You've got these really significant investments being poured into new offerings and global expansion.
By those big bets.
Those big bets, plus that strategic step-by-step approach to AI. And underpinning it all, this focus on improving the core service and speeding up innovation now that the tech rebuild is done. They seem pretty optimistic about continuing to grow and grab market share long term.
So to wrap things up then, it really feels like Airbnb is pushing hard to evolve beyond just being, the place you book a room or a house.
Exactly, and that's maybe the provocative thought to leave you with. Think about how this strategy, expanding beyond core stays, really leaning into AI, pushing into new services, tapping global markets, how that could fundamentally reshape not just travel, but maybe even how we think about living and working in different places down the line. What other unexpected areas, what other adjacencies might they move into next? And maybe consider how these developments, this evolution of Airbnb, might influence your own travel habits and expectations in the years to come.